Good morning, guys. How are we all doing? Welcome to the weekend. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, and we shall go straight over to those Bitcoin 4-hour charts. So Bitcoin on the 4-hour still holding above our trend line support here. However, we are below this support level that we've got in here, but as you can see, it's pretty much a tightening formation, looking to want to break one way. Obviously this trend line support is proving to be a pretty decent support at the moment, but obviously the more times it gets tested, the more times we hang around down here, the less the less likelihood it is to hold, so the more likelihood it is to break. So we do need to get away from here. Basically, we need to get back above this support, get above this downward sloping trend line for the short term, and then ultimately get above 42,000. Otherwise, we are going to be finding some price action down in the 30Ks, potentially low 30Ks at least initially. Let's go and have a look at some of the carnage going on in the real world markets. Look at this, absolutely disgusting. But I mean, what we can see is there's a resistance acting as resistance, this downward sloping trend line, and also this level here. Obviously everybody was selling into the closers, not wanting to hold any positions. Obviously some bad earnings coming in from Amazon not doing too well, along with Apple not doing too well. So yes, weighing heavy on markets here, and these markets are looking particularly dicey. So all I can say is we're getting to the point where, I mean, the Fed has to kind of decide what it wants to do. Also, we're getting to the point where we are clearly looking at recession, lower growth, and then on the bright side, lower inflation. We get low inflation. Do we have to get 8,000 rate hikes this year? No, we don't. So can growth stocks, can tech, can crypto then get a rally once that corner is turned? It most certainly can. But what is going to happen between that point and this point? Do we lose this level in stocks, which it looks very much like we're going to, and then obviously find that sub 4,000 handle, or do we get some sort of a squeeze? Do we get some sort of a pivot from the Fed? Do we get some sort of a not blowing up of the bond market by Japan? Do we get China potentially turning around that corner with its recession and starting to do better, stimulate the markets as well? Yeah, I mean, these are all the if, buts and maybes that we are currently dealing with. But yeah, we are at extreme levels of bearish sentiment, and it's obviously extreme levels of FUD in all markets, which is clearly causing those extreme levels of bearish sentiment. So yeah, bond yields also taking a bit of a tick to the upside towards 3%. Obviously a more typical move into bonds, obviously with a move out of stocks there. Yeah, ultimately though, this is probably gonna peak out and come down, because like I said, we are literally cruising into a recession here, and we are cruising into a more deflationary environment as opposed to the inflationary environment that we're currently in. Not only are supply chains gonna fully thaw out the backlog and obviously excess, and then obviously the tightening of people's belts for certain consumer goods is gonna obviously bring those prices down pretty aggressively, whereas basically the prices that may stay elevated are food and energy, and they will be obviously where people are spending more of their money as opposed to on more discretionary items. So yeah, that is basically the end game for this. It's always been the end game. The end game has always been basically we push on until something breaks, and then basically the reverse happens. I mean, obviously the Fed talks about, well, it doesn't even really talk about, I mean, it tries to avoid the subject of a soft landing, because there's not going to be there's not really going to be a soft landing. There is only going to be a slow growth potential recession. I mean, we've already seen the first quarter of contraction of GDP. market estimating about 1 point something percent, and then we got a negative, or was it 1.4%? Just ridiculous swing. I mean, ultimately we did speak about some of the good GDP numbers we had before previous quarters, where we said this number is just an inventory build. This number is basically building of the inventories, and that obviously now was factored out. Or not factored out, but now obviously not happening, and then so there we get the obviously the negative GDP number. I mean, yeah, I mean, there you go. I mean, why no economists were predicting that, I don't know. I mean, I don't look into this data in this detail they do to make proper predictions like that, but that everybody knew at the time it was an inventory build that was supporting the GDP number, and that wasn't going to last. So why this is a surprise now, whilst the surveys and whatever these people that compile these economic estimations weren't speaking to, weren't looking at like what inventory levels were and what was being bought and what was being sold. I mean, who knows why? Maybe they just didn't want to look. Just don't look at what you don't want to see, basically. So yeah, Nascoin, yeah, Nascoin wrecked as well. So yeah, the market is looking very precarious. All I can say is, as a contrarian, then yeah, peak bearishness. We potentially could see somewhat of a reversal, not even just a short squeeze bounce. You can see a reversal from this. Obviously, inflation, we may get some prints of inflation where we are or higher going forwards, but I think they are ultimately going to definitely struggle against obviously the against obviously the year-on-year comparables where inflation was massively on the rise before. I think we're going to struggle in the months going forwards to see anything like the inflation figures. Will probably get down to about 5% on the official statistics pretty well. When I say pretty soon, maybe the next 2 to 3, potentially 4 months, and then the trend is your friend. We'll probably see us all the way back down to 2%, and then ultimately below that in the longer run. I say in the longer run, probably like towards the end of this year. Let's see what happens. Obviously, everybody is thinking inflation is going to stay elevated now. We're going to have a new baseline of 5+% forever. They are just ridiculous statements that people with recency bias, even consummate professionals with recency bias, will still tell you that we'll have a new baseline now of 5+ or whatever percent. We won't see 2% or lower again. These are these same people that none of them saw 8% when, like, just about 6 months ago or 7 months ago, were never calling for 8% reads for the CPI in early this year. So there you go. Take it with a pinch of salt what those guys say. What else do we want to look at here? Nothing really to look at. We'll look at Ethereum obviously doing what Bitcoin's doing, at the trend line again, not ideal, under the support, not ideal, but all I can say for crypto, guys, is that it could be worse. These are obviously the recent lows that stocks have closed at. Our recent lows for Bitcoin are a good 13-14%, 13ish% lower than where we are now. And then bearing in mind this is a higher beta, higher risk asset. Yeah, there you go. Obviously from our highs we are clearly down a larger amount, but just in this latest iteration of price action, we are not getting whacked as proportionally hard as stocks are. So yeah, I mean, crypto money tends to be more hotter money, more easier to move, less resistance to being moved. Obviously money in people's stocks is more slow moving. So yeah, maybe the crypto money just already left that wanted to leave, which is why we had the initial obviously major pullback. If we actually look at what our pullback was in crypto, yeah, roughly, yeah, about over 50%. I mean, clearly stock markets from high to low at that point didn't move 50%. So yeah, they moved 15%. So that's what I mean. That is the difference with what has happened, and like whereas now we're not as low on a relative basis. But yeah, we shall see. This could just be foreshadowing a big move down in crypto to match stocks, and don't get me wrong, if we do lose this level, we do start to see into the 3,000 handles for S&P. it is highly likely that the crypto market, Bitcoin, will play catch up. And then actually have some more accelerated gains to the downside, and we could very easily see 20k Bitcoin very easily in that scenario. Not that scenario is necessarily going to play out, because I struggle to see any major ramps up in the bearishness, barring obviously the conflict that we have going on, expanding, and potential US assets getting hit directly, which, in all fairness, I don't see how that is not is not an impossible scenario, based on just the fact that the whole of Europe, and particularly the US, is just funneling money, weapons, and everything into the Ukraine, and in effect Russia is fully in a conflict, involved in a conflict with basically the US, Europe, and a lot of the rest of the world. So why wouldn't they just act accordingly? Why are they just going to play by rules and just stay keeping the conflict within those boundaries? So yeah, there could be an escalation there. That could be the trigger point for a severe move down. Barring that, though, I think a lot of the bearishness is priced in. We've obviously got if Japan decides it wants to let go of its yield curve control, then we'll have some serious trouble. Also, we'll have probably a severe markdown in bond values, obviously increasing bond rates. So yeah, things not looking good. Things not looking too good. But it is always darkest before dawn. We are hitting a point where things are pretty bad. I mean, ultimately, I do think the Fed is gonna have to do something. I mean, they can also look at the very strong dollar and think, right, the scope to do things with a particularly strong dollar. It isn't like the dollar is collapsing, is it? Like the euro is collapsing, like the yen is collapsing. It isn't like these things are happening, so they have scope to do things. It is just a case of can that trajectory of inflation reverse? Because as soon as that trajectory I can't even say that word, that direction of travel of inflation reverses, it is probably going to keep going and going to the downside and then undershoot. Just look at what happened back with the oil prices when they hit that 147 back in the day. They literally came all the way down to $30. So yeah, there will be an undershoot of inflation, and there will be a massive scope to basically Ponzi print away. So yeah, there we go, guys. There we go. Remember, this is not financial advice. Oh, in fact, actually, sorry, I did forget. Let's look at these stochastics, because maybe I forgot, maybe subconsciously I didn't particularly want to look, but hey, let's have a look. 4 hour looking to turn down from a low level, so maybe it can help us support that trend line at the moment. 10 hour is turning back down, not looking great. 12 hour is still kind of trying to move up, so that's not too bad. This also flip-flopping around the daily. 2 day pointing down still, 3 day not looking great, 5 day looking potentially awful, weekly not looking good, bi-weekly not looking good, and monthly not looking good. So we can see why market is particularly bearish. We are getting indications that yeah, we could see a decent move to the downside. Also, if we do look on volatility is relatively low on larger scales. So yeah, is we either gonna pump or dump? Is Japan gonna blow things up? Is the Fed gonna do a bit of a more of a dovish stance in view of the precarious nature of these markets and potential slowdown that is going to have an impact on inflation? Ultimately, as ironic as it may sound, maybe inflation is transitory, but it's just a time frame you look at. Maybe a bout of a year or so of this high inflation that we may have, and then we go back into deflation, and the basically nothing can be done about it due to, obviously, we know the debt, the demographics, and technology. Maybe we do go re-enter that, and yeah, and then maybe it was transitory, but just obviously whilst we are in the fishbowl of the moment, that transitory goes out the window when you get a few months of prices of what we have, or say half a year, or maybe even a year of prices. But ultimately, the trend, the longer term trend, is always that of deflation, which is why central banks are able to do the craziness that they do, because ultimately they can't actually cause real inflation in obviously an environment of an aging population, technological advancements, and such a massive debt from every sector, from personal to corporate to governments, weighing in obviously on prices. So yeah, there we go, guys. Remember, this is not financial advice. Or not financial advice. Always do your own research, and I shall speak to you guys soon.